Hey, what's going on, everyone? I'm no longer hiding behind the charts. I figured out how to overlay Photo Booth on top of QuickInTime, which is the screen capture program I use to record my technical analysis. So yeah, what's up? Big shout out to all my subscribers. If you're new to my channel, please subscribe. I'm going to be releasing new content every week. I'm doing Bitcoin full time now. I'm having a blast, and hopefully I can teach you guys what I know. Um, I think my focus is really to persuade the new traders or new people that are getting into the market how not to lose money. That is the mindset you need to have. That's the mindset I have. That's the mindset that I find a lot of the mentors I've had, a lot of different professional traders out there. And once you have that really solidified and those different routines and disciplines instilled, you'll learn that that is what's going to take you the distance. Not investing in this new ICO or that new coin, or following this article or this blog post thinking that you're going to get the inside information. Your probabilities of risk are a lot higher than they are just doing and applying the basic fundamentals of chart reading. Because chart reading is the actual action. It's the history of the market. And combining those are going to give you a better overall perspective of where the future could be for the coin that you have or token you have in question. And I think the perfect example of this is this most recent price action of BCH. And I want to show you what led me to trade BCH. And I know a lot of people make videos after the fact. I've tried to make this video like 20 times already, and I've been trading all night. I wanted to do it real time, but it's very difficult to do that considering I'm not trying to show you guys my account logins or my emails and stuff like that. But hopefully you'll see what I applied that led me to trade. So when I start out with a chart, what I like to do is frame the price. So let's take horizontal line. Let's look at where the highs are. Let's look at where the all-time low was. Okay, so now we have the highs and the low completely framed. And this gives you a general idea of what the range of the price action is. Like coloring in between the lines. So next I'm looking for where are the M's and where are the W's. And what an M is, another way to specify an M is a double top. So it's a double top pattern. So when you look for an M, you're looking for where, let's see, is this one it? This guy is. I've been trading all night. I'm pretty tired, but I want to get this video out before it's too late. So where's the selling pressure? And this is the problem a lot of new guys make, is they start to buy the hype up here or right around here. The problem with that is your risk is very high. A lot of people get in, oh my gosh, I got to buy now, fear of missing out, FOMO. They've got to buy now because it's mooning or they read this or that. So they buy up here, but they don't realize that the risk and the probabilities are high that they're going to lose because the distance to the downside is so high. What we want to do is look for the W's. And what the W shows us is that the risk is a lot lower. The distance to falling to that low is a lot shorter, and we're mid-range here, but if you want, you can combine, you can look at this as the all-time low, but that's the first day that it hit the market. The price is trying to find its legs. It doesn't know what it's worth yet. People don't know what it, a bunch of people got it for free. Was there just going to be some mass sell-off? So another way to frame that price is to find out once it got its legs, where is that at? And now we can see that risk is very low if you compared it to here. So that's why we're looking for the W's. Another reason we're looking for the W or the double bottom is it tells us where the support is. And what I mean by support is that ball's bouncing, but it seems to like kind of just roll here until it's kicked. And why did it get kicked? Well, we can see here that if you look at this volume, these very small red candles, is that there weren't many sellers. So what does that in turn happen? Well, buyers step in. And that's why we see this huge volume candle. And that's why looking for these W's are really important, because traders see that the risk is relatively low. It stayed there, so they had a confirmation of it. This volume, the sellers aren't there, so buyers come in. Now, sellers came in right after that, but we still hit the support again. So W's, a double bottom, is really important. And the more times that hits that double bottom and doesn't break through to, let's say, this next level of support, which isn't far off, is a great indication that the risk is low. Now, we get rid of, I don't like to have my chart too congested. So, okay, we've specified where support is, why support is important. There's a lot of buying pressure there. And we looked at the volume. We framed the high and the lows. Let's look and take another tool that's going to frame price. So we can take the high to the low. Let's try to bring it there. So all I did was I clicked here where the low was, and I went to the high. An important number to look at is the 61.8 to 78.6. What I like to do to look at my risk to reward ratio is take a long position tool or indicator and put that smack dab in the middle. And then I take this to the high and I take that to the low. And this is your prime trading area. Right in here. So let's bring that over there. And so next we want to see what our risk to reward ratio is, and that's 2.35. Great risk to reward. I look for 2 to 1, 3 to 1 risk to reward, especially in this zone, is another indication that there was the perfect brewing of a buying opportunity. And you can see that paid off. So if you had, lined everything up and you're like, man, we're right smack dab where that risk to reward ratio line is. We're in between the 61 and 78. We've framed price. We've found support. We've specified that we're pretty far away from the double top. And we have way more distance to travel than we do to the downside. Those were enough indications for me. When we look here, we look at the percentage. So, if you had bought where that line is, it's about 303. Let's just call it 310 to make the math easy. And say you sold now, that's about 480, 460. Let's call it 460, so 150. Well, what you would do is take, to find a percentage, you would take 460 minus 310, 150. So that's going to give you like 34, 35% return on 6 days. That's a really great, especially with all the indications. Now, just applying those alone are kind of what I use as my base. And then we look at volume. So we also had a volume breakout. So look at the prior high of the volume. We broke past that, and we had a beautiful, like a build-up for it, which is even better. It's not just like bump, bump, bump. It's a nice, even build-up to the pop. So see where that line is, where it's lining up with the price action and the volume? You could have bought in there, which was the first signal or second signal, and still could have made around 32, 31%. And you could have sold this top at 500. I sold off at 497, and I bought in at 418 or 318. So I made a nice almost intraday trade. Let's zoom out. So we had the volume. See how we had low sellers. We had support. We're in between the 61 and 78. We put the 2-to-1 risk to reward ratio. And next, we can apply another indicator, which is the MACD, which stands for Moving Average Convergence Divergence. And don't let all that technical jargon scare you away. All it is looking at the momentum. So, is the momentum changing into selling or buying? And what we can also see is another indication or a signal. Let's try to find a vertical line. Is sellers turned into buyers, the momentum changed right there. So we put that line. Volume was low for the selling, and then price action was just sideways. And what this line is telling me is, boom, this is lining up. Boom, this is lining up. All this is lining up. And what happened right after that? Boom, we went up 25%. And then we pulled back, so if you had missed out, you could have held. It retested support, and then boom, shot up again. And this was a beautiful volume breakout. What else? I mean, if that wasn't enough for this trade, what else you can find? And I'm going to go more into detail on these different indicators in the videos to come. I'm just showing you how I set up my trades. So the next, after the MACD, what was it? Oh, the macro side of things. So what's going on in the news? Kind of the last thing I turn to. Because usually by the time you find out what the news is, it's a little too late. So because they report when things are breaking out. They don't tell you right before. A lot of people speculate, but applying these different metrics is going to take you a lot further than reading the news. So let's look at Bitcoin Cash difficulty chart. We see that on the 23rd going into the 24th, now it didn't drop significantly. Well, I guess you could say it did. But there was a change in difficulty. So it made it more, it gave miners more of an incentive to mine blocks of BCH because it would be more profitable because it was easier. And what do we see here? Let's see what happened on the 24th. Look at these lines lining up. Momentum is continuing. We're having a divergence. So a divergence is just basic. I hate that thing comes up. So look at this line that's moving. The bottom line is the lower, shorter moving average, and the MACD is the longer moving average. The moving average for the MACD is you take your EMA, the 26 moving average, so 26 days, and then you subtract it from the 12-day moving average. And then, so it gives you like a 14-day moving average, and then you have your signal, which is a 9-day moving average. So that's what's giving you the momentum. When those start to separate and the MACD rises above the signal, you have divergence. And that's a great indication that the market is continuing to go in that direction. Now, the more that separates, it's going to, start to want to come back and converge. But I mean, just so many beautiful setups here. What else do we have? So yeah, that's the macro. So it's kind of funny that on the 24th is exactly when this started to break out the second time around. So that's a quick rundown, or I don't know how quick it actually was. You can see in here, this is kind of like, I think around here was like 3 p.m. China time, and then Japan's like an hour ahead, so 4 p.m. So it looks like the Asian market started to start to make this happen. So, and a large amount of the mining power is in Asia. So just knowing all those different metrics and trying to combine them together led to optimal trading. Yeah, so in the future, I'm going to start to really going deep about why the 61 and the 78 are really good buying zone. The P&L is kind of self-explanatory. I can do a little more, talk more about convergence, divergence, volume, impetus, and things of that nature. So hopefully this helped you guys out a little bit. Let's try to refresh that. And overall, if you wanted to take this to an hourly chart, yeah, there we go. You can see how the W is almost perfect. I mean, it's just, I haven't seen a W like that in quite a while. So yeah, if you learn anything, look for the W's, follow my video, try to apply some of the different indicators I showed you. I know I've repeated myself a few times. I've been trading all night, I'm dog tired. I'm about to go to sleep now. But thanks for checking out my channel. Yeah, I'm still doing mentoring, so hit me up on an email, and I'm going to try to get this video out right now. Take care. Oh, treat each other like you would yourselves. Take it easy.